Hello, everybody. And today I wanted to make a quick video on Zscaler, and they just released their Q1 earnings, Q1 2023, and I am very happy with the earnings. I'm very happy with the earnings, and I don't understand. Well, I guess I understand the market how it is, but the stock is down 13% after hours for really, really great earnings. So these are their historic numbers for the past 2 years, quarterly revenue. And they just posted quarterly earnings of 355 million. And that would be 54% year over year. So compared to a year ago, which is huge. And actually, the growth rate at 54%, when I go back fast enough, it's like, yeah, sure, it has dropped from Q4 2022, but it's still up compared to what we were getting back in Q1 2021. So actually, this company keeps growing consistently at 50% revenue growth, which is the type of companies that I'm interested in on this channel. And so this is amazing. This is really good. This is especially amazing given the awful macro backdrop that we've had for the past 3 months. If you go back to the Fed, all IT spending has been scrutinized by companies. Companies are like very wary about spending on IT, especially with this macro. If they were cutting down anything meaningful on IT, we would have seen it in those numbers. So again, Zscaler is a very resilient company, and I guess you could argue there's a little bit of a slowdown, but not really if you go far enough. And quarter over quarter, they grew 11.79%. That's huge. That's huge. Like most companies don't grow 12% a year. And so this company grew 12% a quarter. If you annualize that, we're still at 56% annualized. So I think this company has a tremendous growth runway and can keep growing in the 50-ish% range every year. Perhaps at least until 2025, based on their total addressable market, and probably longer than that. Cybersecurity remains the top priority of IT. It is the number one priority. And the guidance is pretty good to me. I guess it's a little conservative, which is why the stock is down 13%. But it's the role of the CEO. The CEO has to provide conservative guidance in this market. They really have to. Otherwise, they're not doing their job of communicating with analysts. So it's a better thing that the CEO is conservative and then surprises to the upside in 2023. The CEO guidance is conservative. If the CEO has more business, they'll have more business. Zscaler can have more business than that. So again, I see a thesis that is on track. Nothing has changed. The business is just as good. The only thing to me that has changed is the price. We're getting it 13% off today, which actually is not down that much. If you compare to, say, what Crowdstrike was down 2 days ago, it's not that bad. If I look at the metrics that I like, and I know that the metrics I follow are my own metrics, but I typically follow non-GAAP, because to me, stock-based compensation is an investment in your employees. You're aligning with your employees, and so I'm okay with a little dilution if that means I'm going to have fully committed employees to the firm, and that's the main explanation of the difference between GAAP and non-GAAP numbers. So non-GAAP numbers are really what matters to me, and non-GAAP net income has increased. Right, we're at $44 million in net income versus 36 million. So this is a company that's profitable on a non-GAAP basis, right? The cash flow has increased, right? We wouldn't think that this company is doing that well when you look at the stock price for past year, but it's increased. Deferred revenue essentially flat, decreased just a tad, not much, right? Essentially flat. And cash has increased. So this is a company that has plenty of money to keep investing. They have plenty of money to develop their product, plenty of money to fuel the growth, and to become this leader in cybersecurity, the leader of tomorrow, one of the leaders of tomorrow in cybersecurity. So I'm very, very confident in the company. Let's look at the CEO commentary. Strong top-line growth. with major operating profitability, increased free cash flow. Once again, performing at a rule of 80. So profit margin plus growth rate is above 80%, which is like twice as good as what a regular SaaS business is deemed to be good. Regular SaaS businesses are deemed good at 40, and they're at rule of 80, which is amazing. We're seeing customers committing to the products, to the platform, vendor collaboration, and cybersecurity is still a big threat, elevated threat environment, and I don't think the threats from cyber. I don't think cybersecurity threats are going away anywhere anytime soon. Again, customers love the zero trust architecture. They love to simplify IT. They love to standardize on this platform. The platform delivers better security and lower cost. And these are from their former investor presentation, but they're still doing as well. 40% of Fortune 500 firms, 30% of Global 2000, right? Major annual recurring revenue, major growth, very few employees for that type of growth. Net promoter score is very high at 70. Very, very high net promoter score. Like a net promoter score above 50 is considered very good, and they have 70. That's stunning, And as a reminder, what does Zscaler do? Well, they eliminate threats. In the old world of IT, you would log in and get a credentialed access to a whole system, and any point of access would allow a potential intruder to infect the entire system. Also, once you connect from your company system to the cloud, you create another opportunity for breaches. With a zero trust system, there is no more issues of that. Every single movement in the system is credentialed and is verified and controlled. And so you don't have to worry about a breach, say, in one location, one computer, one headquarters, infecting your entire system. There is no such thing as lateral move anymore with a zero trust architecture, because you can't move, threats can't move between each points of your IT system. So this is a very, very powerful architecture compared to the old architectures of IT, which is why they have a fundamentally good value proposition. This is an advertising here that I saw a few days ago, but that I found very, very interesting, is that they are partnering with Crowdstrike. So they are co-peating, as we often say in business. They're co-peating with Crowdstrike, where they're explaining how really, really you have a full integration, right? A full security approach to your device help and to your endpoints by mixing both Zscaler and Crowdstrikes. So they're pushing this partnership with CrowdStrike, which I think is very, very, very interesting, because they are not direct competitors. Their products have some overlap in some instances, but they are not direct competitors. So it makes a lot of sense for them to cross-sell. And I think it's a great combo, and I own both stocks, and it's a great combination of stocks. Again, I can't understand why the stock is down. It was down 13%. Now it's about 10%. I can't understand. The guidance has been prudent, but that's a good thing. You don't want crazy guidance. Otherwise, the stock can be punished 30% next year if there is crazy guidance that they didn't meet. It's still the leader in zero trust. They're an essential combination of modern enterprise. Rule of 80, which is very impressive. Usually rule of 40 is what applies. And over factors from my former video, which I'll put a link in the description, they have 40% insider ownership between the CEO and another big leader of the firm. 40% is founder-led. They have a little bit of debt, but it's not too crazy. It's a robust company. And they have a little bit of dilution, but the dilution has been steady and has been okay, and has been just a few percentage points each year, which again, I believe that's good, because you want your salespeople, you want your engineers, your employees to be motivated to dedicate their lives to Zscaler. And they're motivated to do that by having stock-based compensation. So alignment seems to be a key part of this company. And this company's insiders and employees are very aligned. And so they're fighting really hard for this business to succeed, which is why it has been growing at 50% a year for now more than 2 years in that chart, before longer than that, right? And so can it keep growing 50% a year? That's the bet I'm making. And I think it's a very reasonable bet. Cybersecurity is going to be way less threatened than other sectors of the economy in this environment. So none of this is investment advice. Never been, never will be. This is just entertainment. Thank you for your support. I appreciate if you can like and subscribe to my channel, and you can also follow me on Twitter at @BeatTheDenominator. Thank you very much, and have a great day.